let's move on and let's also go across to Kunal Bothra, who is standing by and joining us live for the Buy Now, Sell Now Pathshaala. Very good morning, Kunal. Take it away. Tell us what is the interesting topic that you have got for our viewers today.
Thank you so much for that. So, given the way the markets are, we all want that this pattern generally shapes up pretty quickly for the indices. So, the pattern which we are discussing today is bullish engulfing candlestick pattern. It's generally a precursor or a first sign that a major bottom could be in place for stocks or asset classes which exhibit this kind of a pattern. And if it's observed for many of the stocks in a very simultaneous kind of a manner, then we expect that the market gets into a bottom formation process, or at least those stocks in the sectors get into that kind of a process. So we look at first a very simple example of how bullish engulfing pattern generally is observed in the charts. A stock or an asset class goes into a downtrend by forming a bearish candlestick pattern on a consistent basis. All of a sudden, you see that there has been a good green bullish candlestick pattern gets formed. This candlestick pattern and this formation, the two-step formation, is called as a bullish engulfing pattern because this bullish candlestick pattern engulfs the activity for the previous day in entirety, and this generally shapes up closer to a major support, a moving average, or a gap for the stock or asset class. So that also is an indicator that maybe the stock gets into a bottom formation process, and from here starts a process of uptrend for the stock. So this could be a very good point of indication that bottom is in place, and to buy could be a better risk reward for that asset class. We'll look at two examples over here. One, both of them are on the index front. One is the Nifty Financial Services Index. How the asset class got into a downward trend. As you can see here, the index formed from 4,400, 500 levels. There was not a zone where the index formed a bullish engulfing pattern, but over here, as you can see that there were two bullish engulfing patterns which were formed simultaneously. That led to a major bottom formation process for the index, and closer to this 3,700 mark, as you can see that the index formed a major bottom over here. And this resulted into the index going into an uptrending mode. So this becomes a very good entry point, and especially when you see such kind of two bullish engulfing patterns getting formed simultaneously. We look at another example again from an index perspective, an index which was in the limelight over the last few weeks and months, which is the metal index. After a mild downtrend, the index forms a bullish engulfing pattern. This results into a base formation process for the index and then starts off a strong uptrend for itself. So that's a classical sign of how bottoms generally get formed, and this candlestick pattern can help us try and forecast or at least expect that or anticipate that a bottom is in place.
Right, that's something new that we've learned today in BNSN Pathashaala. Kunal, I remember quite clearly that when we started the edition of Pathashaala, we would have only one word term that you would want to explain. Now I see as we are progressing with Pathashaala, there are multiple words linked to one particular pattern, that is bullish engulfing candlestick pattern. So that is something new for all of our viewers to actually look at and actually learn. But Kunal, what about the markets then? What's it indicating to you now? What levels of a Nifty should one watch out for? What sort of a strategy should one use given the fact that we are seeing extreme volatility based on the geopolitical news that you're getting from overseas?
Well, absolutely, yes. So I think first things first, what matters over here is not to try and go for catching a falling knife in this kind of a scenario, because you are plagued with a lot of news flows across the globe. So not just Iran, Israel issue, but when you look at the inflation scenario, the interest rate, concerns from the US, and for our markets, the results. So these are three big, circumstantial evidences that the markets are still getting into a phase of higher volatility. Whenever you see a heightened amount of volatility for the indices, the first port of call is to try and reduce the leverage, cut down your position size, and have only those quality names which makes a lot of sense in terms of your portfolio. And the second and the most important part is that these could actually be very good times for long-term, medium-term traders to try and build more quality stocks in long-term plays, which can help you shield from major part of the market correction as well as balance out your portfolio.
Okay, that's the advice coming in for all the traders out there as well as investors, that this is a good time to actually start looking to build on a solid portfolio for yourself.
If you like this video, then like, share and subscribe to ET Now.